Alrighty folks, it is Fed Day, and I think today is going to be proved to be one of those days that we remember. I believe what we are going to get with Jerome Powell is uber hawkish. It's also earnings review day. We have some mortgage demand, and we have some conversations about Think Media. Let's get into it, but first let's acknowledge I tried to do this session live, but for some reason YouTube is giving me some problems, and it is just too early to deal with YouTube problems this morning. So I'm recording this video and we'll post it and make it a premiere video at 7:30 a.m. I am up early because we have another day trip to Vegas to take care of some things with the new house. So let's talk about Fed Day. We are going to get three things today, and only one of them is important. One, we are going to get the Fed rate increase of 1/4 point. I have been very clear when that happens. I will admit I was wrong. I also am under the opinion that this is a mistake. Number two, we will get a Fed announcement, right? A press release. Again, I think it is noise. I think it is a collection of 18 people trying to be middle of the road. And then three, we are going to get Jerome Powell in front of a microphone, and he is going to come out, and I think he's going to be like Jackson Hole Jerome Powell. If you don't know what that means, go ahead and research his Jackson Hole speech from last August. It was roughly 8 minutes, and he basically said, I am going to kick you in the balls. That's basically what he said. We are going to go higher. You're not listening. We're going to go higher for longer. And of course, in the last 12 months, he has been a man of his word. So the things that I will be looking for from Jerome Powell is he talking pause or rate hike in September, right? Is he being that explicit? Is he being explicit enough to talk about potentially 2 more rate hikes, September and November, right? These are the things that I will be looking for. And then finally, maybe he will talk about rate cuts next year or not. I'm sure he will say he has none planned, things of that nature. So again, with the job market being what it is, earnings being what it is, the Dow Jones Industrial Average being up 12 days in a row, I have no idea how the Dow will be up today, given what I expect at 11 a.m. Pacific, 2 o'clock Eastern. So again, I think today could prove to be some fireworks. I think Jerome Powell, again, is like, I don't know what I need to do to get this thing going. So higher for longer. He's going to be uber hawkish. It'll be interesting to watch the 10-year. Will the 10-year break above 4%? There's a lot of stuff going on today, so watch for that. We've got some earnings to talk about, some tech earnings and some non-tech. Obviously, we had Microsoft earnings, beat top line, beat bottom line. They did give some lower guidance, and their cloud growth is slowing down. Last quarter was 27%. This quarter is 26%. Snap, one of those early reporters in the communication space, the internet communication space, weak guidance. Although they beat top line, beat bottom line, gave very weak guidance. Is this a sign of what might to come in Meta, says Facebook, and other providers? We had Google, Alphabet, they beat top line, beat bottom line, had an impressive 7% growth year on year. Their cloud growth is up year on year, 28%. So again, maybe we have winners and losers. I don't know. But again, it does seem like the market likes Google's announcements, earnings, and forecasts more than Microsoft's. General Motors came out, beat top line, beat bottom line, and raised guidance. Again, car manufacturers raising guidance. What is going on there? One earnings that I think most people missed that I would go back and look at is Robert Half. Robert Half, you don't know who they are. They are basically in the consulting services business. They have consulting services and hiring, job placement, if you will. But they missed pretty badly. So is this a sign of what might come in Accenture or other consulting companies? How about some tech companies that have large professional services arm, maybe like Salesforce, for example? Remember, Salesforce, I think, gave us last quarter some earnings announcements about professional services projects being longer to sell, smaller projects, things. I do think Robert Half might be a sign that tech spending is shrinking or weakening. Sales cycles are getting longer. I think Robert Half could be a canary in the coal mine for some tech. So again, if you're in that space, you might want to go look at that earnings announcement. Other things that came out this morning: CocaCola beat top line, beat bottom line, and raised guidance. Boeing beat top line, beat bottom line. So we are getting a lot of folks beating on the top line. We're not getting quite as many to beat on the bottom line. We've had some, actually it's the reverse of that, sorry. We have a lot of people beating earnings. We've talked about that yesterday. And now we have some tech and others beating on the top line. So again, it's a very, I would call this a mixed bag so far. Lots more earnings to come. This is a busy week, next week as well. But again, I would say generally speaking, Q2 earnings better than expected. Again, we will get Q2 GDP numbers, I think, tomorrow. And again, I think they're going to be pretty strong, something like 1.7, 1.8%. So again, the economy as we left Q2 was still going pretty strong. We do also have something from Wells Fargo, beat top line, beat bottom line, and announced a $30 billion stock buyback. I don't know about you, but going into the environment we are in, I'm not sure a bank, even if it's one of the big seven, should be dropping $30 billion of cash on a stock buyback. I think that is an unwise decision. What are some of the things that we've learned in the banking sector is cash, AKA deposits, are valuable. It's what a lot of banks are searching for. Speaking of banks, we have another weak bank being acquired. This one is PacWest. PacWest was that next regional bank after, what was it, First Republic, that just had to be acquired. Looked like it's being acquired by Bank of California. Bank of California is buying PacWest. Basically, two regional lenders getting together, hoping to be stronger together. Folks, this bank consolidation is coming. I do think if you want to call it banking crisis 2.0, I think that's fair. I think with the Fed going higher today, the Fed talking higher for longer, I do not think Bank of California's purchase of PacWest will be the last one. So again, more of those things to come. So again, lots of stuff going on here. What else we want to talk about? Oh, let's talk about some bears. I read some articles. Again, I always try to get the other side. I want to see what's going on. I try to be balanced. I don't do doom, though. Let's be very clear. There's a difference between being a bear and doom. What is the difference? A bear has well-articulated thoughts and has differing opinions. A doomer is daily drumbeats of doom looking for ad revenue. And you and I both know who the doomers are. Block them. I don't mind watching bears. I read 2 articles just in the last 24 hours. One bear, John Huseman, he believes what we are exiting is an environment of extreme yield seeking and speculative bubble, which I think makes sense. What have you and I talked about over the last year or so? We had a lot of people dispelling cash, seeking yield, hence all the limited partners going into syndications, which again, I tried to warn you was a problem. Not all syndications, but when you see brand new, never operated a building, start a syndication and get funded, you can have the blow-ups like you had in Houston where people lost $100 million. So again, John Huseman is of the opinion that we are exiting a yield-seeking environment and there is a price to pay. I think that makes sense. I think that is a logical argument that I agree with. He goes on to say, because of that the S&P could collapse 64%. Now, that's a little bit more than I get around, but again, I don't, the headline will be, hey, bear calls 64% collapse in S&P. I don't get twisted about that. I enjoyed his logic and I agree with it. So now it's like, where do the dominoes go? Follow that with Jeffrey Sherman from Double Line Capital. He sees a deep recession kicking off that will cause the Fed to cut 100 basis points, folks. Yes, 100 basis points next year. This is interesting because if you actually look at the expectations for interest rates, they're currently pricing in 130 basis points of cuts, which means somewhere between 5 and 6. So the Fed's going to go up to like 5.5, and then they're going to cut down to around 4 next year. The Fed always goes too far, right? They don't just sit back and watch their work. It's kind of like they just need to sit back and watch the paint dry, but they don't want to. They just want to go in and they just want to keep messing with it. We shall see. Don't know if you saw this, but UPS and the Teamsters have come to an agreement This was going to be or potentially be a big deal, right? I think there's like 319,000 Teamsters. If UPS went on strike at the end of the month, that would have been a problem, and probably, in my opinion, would have gotten President Biden's, he would have stepped in and asked for a cooling off period, which we've done historically, but we don't have to worry about that. There's an agreement in place. I think it's being voted on by the members of Teamster shortly. So again, it looks like that was avoided. And near as I can tell, the Teamsters got what they wanted, UPS got what they wanted, so it really does appear to be a win-win. But for you and I as consumers, I would expect UPS prices to go up, right? The money's got to come from somewhere. And with all the wage increases, which again, fully support, you and I as consumers could expect, ooh, I'm going to sneeze, package delivery costs to go up. So something about home prices. Again, shout out Lance Lambert from Fortune. If you're not following him on Twitter, you're making a mistake, or reading his articles on Fortune. I'm not sure if you knew this. I look at housing almost every day, and I didn't know this. In 2022, think about this. This is like a brain teaser. In 2022, home prices went up 5.6%. Okay, I think you and I probably knew that. That's okay. But did you know that through the first 6 months, it was actually up 10.65%? So again, we are on a trajectory for 10.6, but we end the year at 5.6. Why is that important? Well, we are entering the slow season. We've talked about that. So as of right now, at least through May, Case-Shiller just reported only through May, we're up 3.68%. And again, remember, Case-Shiller is ridiculously delayed. We got May data and it's almost August. It is what it is. But we are entering the slow season. We just got mortgage demand. Mortgage demand, I have it here, down 3% week on week, down 23% year on year. 7% matters. I think what you and I have seen over the last year, talking with the various millionaires and top 1% agents, 7% stops demand, 6% ignites demand. So who's going to win out? Is supply going to slowly build, right? I think Logan from Housing Wire said we got about 8,000 active listings last week. Will supply grow simply because demand is so small? What we have seen recently is demand is still exceeding supply. But as we enter the second half, as rates stay anchored to 7%, will we see inventory grow? Simply because lack of demand. Because again, new listings are still down 20%, 25%, 28%, 30% in Austin. So what does this all mean? Watch days on market. If you are a real estate investor and you have a buy box and you follow what we do at one rental at a time, use days on market. I can't be more clear. Your job as an investor is to find the motivated seller. And I think you and I are going to be very, very lucky. For the next 5 months, certainly through December and probably January, we are going to see and we're going to find who wants to sell versus who needs to sell. And trust me when I say this, as an investor, you want to buy from somebody who needs to sell. Better price, better terms, better inspections, better credits, rate buy downs. Go get it. Write disrespectful offers. I am using days on market. I suggest you use it. In my market, I am not looking at first day listings or first week listings. If it's a pretty property, ready to go, FHA, VA all day long, good for them. I want to find the properties 30 days or older. That's where I am fishing. And if you're an investor, that's where I suggest you fish as well. So as you may know, I have an event coming up on August 13th. It is 100% free. I was inspired to do this event because I went to a real estate meetup and I heard a lot of you say, how would you start today? So in 2 hours on August 13th from 8 to 10 a.m., I'm going to take 500 people through exactly what I would do today. It's not going to surprise you. It's going to be very much buy box oriented, grow your network, but I'm going to be explicit. I'm going to show you the exact steps. I'm going to show you what I recommend you do. And again, 100% free. I want to answer the question in detail, just like I tried to do at that meetup. You're going to see a link below. We have 100 spots left, actually 97 spots left. This event could sell out today. And by sell out, I mean full up. I'm using my personal Zoom account, which is capped at 500. So we have 97 spots left. If you are watching this and have not registered, there's a chance it's gone. Go right now. Pause the video, go to the show notes, find the link and register. 97 spots left. It will probably be full by the end of the day. If you miss it, I'm sorry. But again, go get it. 500 spots, 97 seats left. Now, let's talk about, before that, let's actually congratulate somebody. Kashif, congratulations for getting your card, your next deal. I will drop it in the mailbox right over there. Again, Kashif, congratulations. Thank you very much. Now let's talk about this Think Media interview. I was lucky enough to be interviewed by Think Media. I again will put the link below if you want to watch it. We talked about one rental at a time and how my workflow is. Again, I think one rental at a time is a unique channel. 1, I don't edit any videos. 2, I average 6 videos a day. So what are my kind of 5 takeaways from that discussion? 1, I want to answer a question that I've seen in some of the comments. You know, Michael says he worked in tech, but he's not technical. I'm not sure why that's hard to understand, but I saw 5 or 6 people respond with, what does that mean? I was an accountant, right? I played with spreadsheets, and I was a sales guy. I am not a computer scientist. I'm not an engineer. I don't understand all this gobbledygook and JavaScripts and Python, and I don't get it. I didn't have a social media handle or feed other than LinkedIn. I am just like lots of you. Lots of people come to Think Media and they're not technical. I'm recording this on my phone with a microphone. I did that for a year. So again, I'm not sure why some people don't understand that. I was an accountant and a sales guy, not a computer scientist, not a programmer, none of that stuff. So again, trust me, if you are like me, not technical, it takes a phone and a wired mic. It's not even wireless. It's not even a wireless mic. It's a wired mic. So there you go. Number 2, no editing. I believe that if you edit your videos and you do it well, you will get more views. Me, I'm going to focus on content, getting the video done and uploaded. Note, don't edit videos. I won't ever stop doing this. Also, one of the things I want to highlight is yesterday we announced a content creator is taking some of my videos and publishing them elsewhere. I will never stop doing the lives. I love doing these lives. I'm not interested in creating, content. My focus is one rental at a time. But let's be clear. I create 6 or 7 videos a day, and that is too much content for the YouTube algorithm. The YouTube algorithm doesn't know how to share my content, right? If I only did 1 video a day, I am convinced my channel would be bigger. 11,000 videos. I don't know any channel with 11,000 videos, but that's okay. I am here for impact, not some vanity metric. If you want to get something like one rental at a time in your area, I suggest you find 3, 5, 7 like-minded people. One rental at a time is what it is today because we have 10 millionaires that come back and talk to you and riff on existing topics and what we are doing today. This channel is not full up of people who read a book or an article or create pretty charts and have no idea what they're talking about. My channel is not full of failed mortgage brokers who talk about bonkers stuff. This channel is not full of people who are renters talking about investment properties. This channel is full up of millionaires who are doing this every day. And we share our losses. We had many real estate investors talk about $100,000 losses in January and February because the market caught them. So again, this channel is different and unique. If you want to create a channel like this, go find 3, 5, 7 friends and talk to them once a week. It's amazing. Second, or I don't know, I guess fourth, a lot of you are chasing monetization. I suggest you chase impact, interest, sharing. I want to highlight this again. I think it was a month ago, we talked how about one rental at a time made $1 million. I want to be very clear with this. I made 1,000 videos and made 0. I didn't even know what monetization was when I started. It's about impact. If you chase and are authentic and give and you keep trying to get better, people will resonate with that. Not everyone, right? I talk about people in the parking lot, people in the stands, and people playing the game. I don't care about the people in the parking lot. They're drunk, their lives are going off the rail, they're doing whatever they're doing. I don't care. But if you're in the audience and you want to make your life better, that's who I am focused on. That is not there's a lot more people following Crash Bros and want permission to sit on their ass. That's not me. That's not what I do. So again, if that's of interest and you're in the stands, I got you. I have a growing community of like-minded people, a free Facebook group for students, all of that. And then finally, I know I produce too much content. I know that the YouTube algorithm likes 1 video a day. I'm not stopping. We're doing 6 videos a day for the foreseeable future because I'm having fun. I don't know if you're having fun, but I'm having fun. So at the end of the day, like, subscribe, comment. We are 1,500 people away from 50,000, which is a huge mark for me. I've been chasing that for a long time. So like, subscribe, comment, become part of the channel. Again, Kashif, I will drop your card in the mailbox right now. Bye.